Welcome back to the channel. I'm Doug the Retirement Guy. We have our weekly review of the YieldMax ETFs, the weekly dividend ETFs, all 10 of them. We're going to give our cash cow award out. We're going to review each and every one of them. But before we go into that, I got to say a thank you to all the subscribers out there and all of our Patreon supporters. This information was given to Patreon about over an hour ago. So they're already up to date. That's the advantage of being a Patreon supporter. So don't be afraid to join. It's free. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This information is for educational and informational purposes only. It should not be considered financial advice. And if you need financial advice, always contact a financial advisor. This week on the growth of the funds, we take a look at very green out there. We see a lot of green on the board, which is what we all love to see, especially in the YieldMax packages. Starting off right off the bat with CHIP up 2.53% this week. And then the AI group, the GPTY, up 1.41%. And then the third noticeable is going to be QDTY, the NASDAQ 100. NASDAQ, the S&P 500 have all been climbing, doing great, and these guys are starting to benefit from it. The other one that gets me is taking a look at the 30 days. You're seeing some big greens popping up, which are positive remarks. That means over the past 30 days, we've seen massive growth in all of these funds. As we see growth in this, it'll help continue to knock down the reds in that year to date, which we're excited about. So overall, very pleased with the week on natural growth. If we look at the big winners or the big names out there, ULTY is you can call it flat, but it's actually up 1 penny this week, so 0.01%. The other one I want to make note of is Salty, SLTY. That's the new one that's come out, and that thing continues to do exactly what we expected and what we planned it being, is down 2.91%. It's down 13.82% since it's being issued out there. So we're just watching that one, waiting for it to come down to see where at the bottom will actually turn into be. The other one, big one, is YieldMax and YMEG. YieldMax is up, again, just another penny. And then YMEG is just down 10 cents. So across the board, very pleased with the growth. Now, hopefully we can get pleased with the dividends as well, and we'll see what's next. Oh, we had the report. Just as I said, CHIP wins the growth rate at 2.53, and CHIP also wins the year to date at 21.85. So the CHIP package is very strong. Now let's take a look at the dividends as we go through here. Well, the number one winner of the dividends is paying out the most is Salty, even though it's down. Salty paid out 52 cents this week. Last week paid out 55. And the second place is going to be the crypto LFGY at 51 cents, up from last week of 46 cents. But we look across the board, ULTY 9.21 cents, kind of just fluttering back down to that 9-cent category, which I know a lot of you don't mind, but it's just back down to that 9 cents. YieldMax dropped dramatically, about a 5-cent drop there. We give a positive to YMEG being up. SDTY, the S&P 500, is up. And then the AI group, GPTY, is up. Unfortunately, and I'm talking, this one here is so minute, it shouldn't be marked as down, but it is. And that's going to be the chip semiconductor. The other positives that we see, and I'm going to call them positives and negatives across the board, is the ROC return. And you can look that only 4 of the groups actually used ROC this week. So the positive is this is actual true hardcore numbers. The negative is we got to pay taxes on this stuff. But the ROC is always something that we watch for. And you can see the CHIP was 95%, Salty 97%, YMEG 94%, and YieldMax 48%. Everyone else 0. So however you want to look at that, positive, negative, just says that, again, another great week from YieldMax doing what they're doing. The distribution yields, now guys, remember the distribution yields are just what it calculates out with the current new dividend. It's giving you kind of more accurate numbers of what we're doing year on, year off, and what it will hold at. So ULTY is at 85%. Salty moved up to the 75.71%. And then the crypto LFGY moved to 73.16. So across the board, these guys are still doing some great dividends and balancing out. And we still have, 3 months left in the year to really get some strong numbers out of this. So All Salty has paid the biggest one. That is kind of the reward that we give it. Now we get into the distribution payouts, and this is the next step that we want to watch too. And this is where we're going to reward our cash cow from. So you take a look at what we do here is we take the dividend and the current price, we divide the two into each other, and we get the percent of dividend. So that means out of your $5.64 for ULTY, a 1.63% this week is paid out back to you in dividends. That's what makes it the most. That gives you the most return on your dollar. So that one right there wins and across the board, and it is our cash cow of the week is ULTY. That's the second week in a row since we've issued this that they have continuously won. Your next one comes into is LFGY, the crypto program, paying 1.4, so very solid number there. And SLTY, the salty, at 1.22. So realistically, to give you guys a basis points, what you want to be is you'd love to see this thing at about 1% or higher. And if you're at 1% or higher, it means you're getting the most return out of your dollar. So out of all of this, as we've said week in, week out, we've seen people report onto it. We've seen people comment about this. Is the best buy across the board right now in YieldMax is still Alti at $5.64, paying 9 cents. It gives you that 1.63 return, and it's been pretty much that very consistent. So that's why we give that its cash cow. The next one, LFGY with the crypto, it does very well, pays you a nice big 51 cents per week, but it's going to cost you $36. So that's almost 7 times what ULTY does. So you got to make sure you're getting 7 times the amount of dividend to walk away from ULTY. So as a whole, very, very pleased with the numbers that we have. We again would always like to see more. We'd like to see bigger numbers. The one that we've talked about last week was CHPY, the semiconductor. We still think that's a strong piece to play with. It came in at third at 41 cents. But look at that dividend. The price of the stock is going up. That's why we always want to buy it when it's at a lower point. And this is another factor. It tells us when we're in good positioning and buying. So anything over that 1% is probably a good look at buying. The assets under management, a little disappointed with what they've done this week. It looks like we probably had a lot of sell-offs of the covered calls or covered puts. We've had a lot of sell-offs because we look at this and we can almost go across the board. Every one of their funds are down from last week. Now, is this concerning? Well, Salty concerns me. It's 50% down, 12.49 million down to 6.07 million. Tells me that they're probably going to issue a lot more stocks out there to generate more income. Definitely with the excitement of Salty being out there and getting some traction. But nothing to sit back and say, "Ooh, major," other than that Salty being 50% drop. The rest of them are all, I call it normal drop-offs that will recover fairly quickly. Same thing with ULTY. Again, it's dropped to 600,000. No, excuse me. It's dropped 6 million. So it's definitely things to watch for. Now the return on investment. Now a lot of people I think you guys are finally understanding this. Anyone new to this, return on investment basically is how I buy funds. It's how I buy all my funds. I always take a look at this. And basically what it says, if I put, and we're going to use ULTY for the example, if I put my $5.68 into the fund, how quickly am I going to get my money back? And that's what we want to know. How quickly can I get my money back out of it so that this thing turns into a true cash cow, that I have no money invested, because I got all my money back from dividends, and it just continues to pay. Well, and this is the winner right now, is ULTY is the winner, even with that 9 cent dividend, and the average of a 4-week average of $5.68. This thing's return is still 59 weeks, just a hair over 1 year. So when you are buying anything on a return on investment, you always want to be in that year or less. Anything above that, you always want to evaluate what's going on, what can we do. So right now, ULTY is over that 1 year, so you want to question it. That's why you do the research. It's been a cash cow for a couple weeks. It's paying steady, so it's one of those I would say, yeah, it's okay to buy. It's going to be a nice cash flow, and $5.68, in 59 weeks is still okay to do. But when we turn around and take a look at something like SDTY, the S&P 500, that you have a $45 fee and you're collecting on that $15 or a 15-cent dividend, we're talking 4 years, not even close, not even interested in that. That would have to be a strategy that I'm going to put into a separate portfolio to say I want long term, but I want growth and income combo, and I don't know if a weekly fund will actually give you that. So we look out for that one. So our real winners right now are going to be ULTY, LFGY at 1.37, and then Salty is a good one. I'm going to explain to you here is at 1.51. So what you have to look at with Salty, even though it pays a great big dividend, how long has it been paying that dividend? And with it being at $47, is what direction is that fund moving? So what it comes to is already knowing the information. This is why I want to share this and give you the idea and how to operate this. We know SLTY is still dropping. The fund is still dropping the value. So is it time to jump into that? No. How long have we been getting dividends? Not very long at all. So what we want to do is you want to make sure that you have at least about 3 months of knowledge on SLTY to see where it's going, what direction, has it hit bottom, and then make a decision. Because I believe SLTY, if they can continue to hold those 50-cent dividends, this thing will probably be closer to a $35 fund. And if you do that, all of a sudden you're going to be in a nice return on investment only just a few months away. I think that's going to where it's going to dial into. Just my opinion. I am not a financial advisor. I do not use anything other than just my personal knowledge of reading charts. It just tells me what direction that we think it's going to head into. So across the board, nothing here makes me go crazy other than ULTY that would say, hey, jump. But keep an eye onto it as we look at right now. So let's take a look at the total returns. This is the most important part, I believe, of any of this stuff, is you take your dividend yield plus your growth yield and to give you a total return. So when you can sit here and say, oh, I'm getting 85% from ULTY, but you lost 37%, you're really only gaining 47. So even though 47 is still a great big number, you also have to understand that 85 is big compared to 47, night and day difference. So when we take a look at this, of course, we go through the 3 big ones in the dividend yields, ULTY, SLTY, and LFGY. When you add in your growth, which the only one that has a positive is CHIP, you take a look at the numbers on the side end. The winner right now is SLTY at 61.89 and CHPY at 60.43. LFGY rolls in there at slot number, my error. ULTY falls into slot number 3 at 47.39, with LFGY falling up at 44.32. So overall, these guys do pay some decent dividends, and some great total returns. But this one also gives you a real good picture of what's going on. Like YieldMax is way down. You're not getting a lot of money in YieldMax. And you're also not getting a lot of money in their SDTY, the S&P 500. and their QDTY is not doing as great as others. So this is a great comparison that you can use with other funds out there and say, hey, am I in the right funds? Am I in the wrong funds? Maybe I need to make some changes. Maybe I may make some moves. And if you don't get the big dividends, you can't give up a lot of growth. And if you don't have big dividends, you better have a lot of growth. So these are how you compare the two together. So Doug's top 5 picks, we brought this back for you with this one here. And number 5 is going to be GTPY. As the AI is cooling off, I will keep my eyes on this one. Now, these are not things I'm just saying jump out there today and go buy. What I'm saying is put these on your radar. Keep focused on this because you have to do your education. You have to do your research. And I think GTPY, as that AI is going to cool off here, I think the price of it's probably going to start dropping off. And it's not saying that it's a bad fund. It's not saying it's in a bad area. I think it's going to recover, recoup, get down to some lower numbers, and we're going to be able to buy into this and be prepared for the next wave of AI. Again, we talked last week. I gave everyone a lot of advice on the chip program. It's a long-term play because the chips in the AI category are definitely a huge factor. The chips are being used all over the place, so it's kind of one of these things. It's like buying the milk at the grocery store. Everyone needs it. So this is a long play. And last week, if you guys were with us, we said chip. I think for 2 weeks straight, we've said chip is a game changer. It's a buy. It's a game of the way. And you can see this week we've had a 2.53% growth in that fund. So I think it's one of those that was a great move. Now I know it's above that 4-week moving average, but I still think it's got a chance to do something right now, and then it's just hold and long play the program. Number 3 is SLTY. Now this one is good for income. We showed you that earlier, paying that 50 plus cents on dividend, but the price is dropping. So this is why I tell you, put this on your radar, keep an eye on it, understand it better than anything, because I believe as this thing continues to drop, we have about an $8 price drop. And after it hits the $8 price drop, it's probably in an area that will probably say, hey, time to possibly invest. I don't think this is going to be one that's going to get down to $5. I don't think this one's going to drop like other, the ULTY has done. But I really, truly believe this thing should drop by at least another $8 before I'm looking to get involved into it. So if the dividends stay where they're at and we can get a $5 drop off, this thing would be a nice cash cow. Number 2, LFGY. This thing just continues. The crypto on their program, even with crypto, this is the thing that's getting me. Even with crypto, the volatility is not as strong in crypto. It's been really quiet. It's been slowing things down. And I think it's a good, solid income program. This week paid 51 cents in dividends. The distributions are right up there, well over 70+%. Week in, week out, I think if I remember right, this thing was like 38 cents, 46 cents, 51 cents in dividends. And that's doing it without a lot of volatility. So I assume they're probably selling some puts, they're probably selling some calls, playing both sides of the fence. But with this one, with that little bit of a price drop, I just think still it's an opportunity for you to jump in and be prepared and definitely enjoy some income. And number 1, of course, is going to be ULTY, back to number 1. And again, we go with the good income. That thing just steadily pays at 9. Right now you got to calculate yourself out at a 9 cent week in, week out, 9 cent regular. So all the way through. It used to be 10 cents. Now it's down to that 9 cents, but the price is still holding at that 564. And if you looked at the other video that we did, we gave you the forecast, and their forecast is following to a T. They said this thing is going to hold in that 560 range. And then by the end of the year, we could possibly see a $6 to, now I know they throw it out there, but $6 to $7 range. I'm more like we'll probably get back to the $6 category by the end of the year. But overall, I don't see any big changes. I see it's steady dividend coming in. I see the steady, penny here, penny there change. You'll see it drop 3-4 cents, but it comes back. It's not designed. None of these funds are designed for fast growth. They're all capped. So when you see growth, these things mean they're doing their job. They're doing good moving forward. So that just gives you the top 5. They're not saying that to invest in any of them. It's take a look at them, do your research, and I think these are the 5 to narrow it down out of 10 to give you a better chance of spending more quality time with it. Guys, it's Doug the Retirement Guy. Hope you liked the video. Give us that thumbs up. If you're not, hit that subscribe button. And of course, always leave a comment below. And we want to thank each and every one of our Patreon supporters. You guys are phenomenal. Thank you for your support. And if you like this kind of information, check out Patreon. It's free to join. And then if you want, there's stuff behind the scenes for a little bit of fee or a one-on-one with myself. You can get into that. But most of this information is on there, and it's just free of charge. So we'll talk to you later.